Welcome to our session today on investing in sustainability. Where should the best sources of capital be invested? And I'd like to welcome our speaker, Shiva Dastar. Hi, Shiva. And will you tell us a little bit about yourself and your relationship with GCV?
Yes, hi Amy, and hello everyone in London. I wish I were with you in this amazing, buzzy, probably room. Unfortunately, I'm sitting here in Luxembourg. Indeed. So I'm Shiva Dustar, heading the Innovation Finance Advisory at the European Investment Bank. And I've been a loyal participant and active presenter at all the symposia of global corporate venturing in the past. We have indeed over the years developed a really strategic and complementary partnership together. And I will tell you a bit more about it later on. So again, thanks for having me and looking forward to being part of this discussion, at least virtually.
That sounds great. And what do you think the role of multilateral development banks like EIB is in investing capital?
Indeed. So multilateral development banks, as the name suggests, are sort of crossing borders. And the European Investment Bank is the multilateral development bank of the European Union. We have also self-declared ourselves to be the EU Climate Bank, which of course is really raising the bar, and we are transforming ourselves to really live up to that expectation. So what our roles are, or where really MDBs can play an really critical role, is to channel capital towards sound projects where they're most needed, tackling some of the global challenges, like right now the climate challenge, the pandemic challenge, but really both global and regional challenges, and doing so very often because of market failures. And why do we have market failures? Well, because of potentially a risk perception, or just a very high risk, because of often regulatory regimes that are not yet fully set up or coherent, because of information asymmetries. Very often investors don't really know where these projects may be. So and then there's, of course, the cross-border complexities. I mean, when you deal with global challenges, that is obviously an indispensable part of it. And we see that there also MDBs can really play an important role of connecting regions and countries through their investments. So now, how do we do that? I would maybe highlight just three areas. One is that we play the role of very often helping to develop new markets and new market opportunities by going in there earlier, taking more risk, providing patient capital that is much more mission oriented, and paving the way to then mobilize private capital down the line. And we see that, right now in our own portfolio, we have instruments like the energy demo projects and the infectious diseases financing facility. So two key SDGs that's, on both on the energy and on the global health front, where these instruments can actually go into projects where, the technologies are being tested for commercial scale up, in demonstration pilot stages, very often with risk levels where the private sector would not come in. And this is sort of the role, therefore, that banks like ours can play, to then help these technologies get to a stage where they can be scaled up with additional capital. The second role that we have is also develop new financial products, risk-sharing schemes. We see that right now in the green space. We were the pioneers of the green bonds, which, as you know, is our $1 trillion market. But the main thing is, how do we now scale these things, or bring them also to corporate players to issue green bonds, green loans. So we are continuously also inventing and reinventing our own product suite and paving, the way for those instruments to become more mainstream. And then the third area is where I'm actually very actively involved in and heading the advisory side. It's on the one hand advising companies, promoters, to have better access to finance, to help them prepare for financing by the bank or other investors, but also, and this is where we are now going to play a much more bigger role is provide green advisory support to financial intermediaries so that they can green their own portfolios, that they can help their clients to develop new products, green bonds, and so on. And that's where the scale effect comes in.
Well, that's great. And can you give us an example of what you're currently working on?
Yes, indeed. One of the examples I would like to mention is hydrogen. The reason for that is this is actually one of the more recent examples of our excellent collaboration with Jim and his team at Global Corporate Venturing. So in the hydrogen area, we are so again going to look at it very holistically as hydrogen. How can the EIB help develop the hydrogen economy? One of our starting points has been right now to map the risk appetite of both corporate and financial investors currently in hydrogen-related projects. And this is where GCV came in providing us consultancy support on the early stage financial investor front and what their appetite is, what would be the barriers for them to invest, what would be opportunities, where they see the risks. Now, together with then McKinsey, who helped us on a more sort of developed end of the market, we jointly sort of mapped the value chain of investments. And this is actually a report that we're still right now internally reviewing both at the EIB, but also with the European Commission to really then derive the recommendations. Now, what you can see is here, and to give you a very quick sort of a glimpse of where the recommendations are leading is, they are very much giving us the perspective of there is indeed, in the case of hydrogen, a lot of the things I mentioned in my earlier answer are very relevant there. You don't have a regulatory regime that is well set up. You have a high risk perception of hydrogen projects because of the value chain, not really being well yet sort of set up. How do you get the green hydrogen to the end user, and therefore, the expectation is indeed from banks like the European Investment Bank to play that catalytic role and come into these investments earlier with long-term capital and therefore actually develop new financial instruments that allow us to share the risks better and adapt those instruments to the needs of the hydrogen economy. And then the third, again, point on advisory, that also a lot of these projects do require additional technical and financial advisory support to actually really mitigate the risks that are perceived. And all of that together would hopefully bring in the trillions, as Jim would say, into the billions of capital that the public sector would provide.
That's great. And so what would you like to hear from the other panelists today?
Yes, well, I wish I were there in person with them, but I would love to hear their view of what they see the role of public sector banks, and in particular multilateral development banks like the EIB, but also others, is in channeling more investments into the sustainability. I see that there may be a discussion on nature-based solutions. This is another area where the EIB is actually really trying to get its head around what type of financial instruments do we need to develop? How do we need to assess the bankability of NBS, projects? And therefore, I'd love to hear their view, how they see this space develop and how the EIB could play an important role also there. Thank you very much.
Thank you.